Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. So today is 15th of July and it's been a good day in the markets and it's been a okay week where we are in the consolidation phase. Nifty started off at about 25,600 where it made its top, and from there it has been consolidating, and during the course of the week, last 7-10 days, we have seen that 25,000 also got touched, but it got defended. And today as we speak we are at about 25,200 odd levels, closer to that. So it's been a good recovery. Any fall in the market is being bought. I have been maintaining that whenever you see a fall in the markets, it's a buying opportunity, not to be missed, because a lot of factors are working for us. A lot of things are positive for us. So whenever you get an opportunity, like this was a mini opportunity, I would say, not to say that the markets can't go down further, but whatever little opportunity was presented by the difference between 25,600 to 25,000, whatever 2.5% kind of a pullback that was there, it's a good opportunity to look at what you can invest in. So me, if I talk about personally for myself and for my clients, we look at such opportunities to buy and add to our portfolios, because when you see that the direction of the market is established, that it is up and we are almost touching all-time high in a lot of indices like banks and financials and mid-cap and so on, it's just a matter of time before Nifty also tries to break that, until unless of course the trend reverses, and then we start seeing levels of 24,500, 23,900 and so on. Then it's a different thing. Then we'll know that we are in some sort of an intermediate correction. But till the time these levels are taken out, every opportunity is a buy on dips opportunity, according to me, and I might be wrong in this, but that's my view, and that is what I tell to all my clients as well. So I'll take you through today's market action, and how what are the indicators, and how things are looking like, and we'll take it from there. Yeah. So starting off first with the Nifty chart. So this is the Nifty chart, as you can see over here, and Nifty is been in a consolidation phase, as I had said. So it had made the top on 30th of June, and we are on 15th of July. So a good 15 days consolidation has happened. The last consolidation happened for 1.5 months, from 12th of May, when the markets actually broke out into this 25,000 kind of a zone, to somewhere over here, sorry, to 24th, yeah, 25,000 zone, to 20th of June. So this was again a month and a half kind of a consolidation, as you can see in this particular band, and they broke out on 20th of June, and the high was made on 30th of June. So you will get these kind of phases, which are consolidation phases. It's quite possible that it might last for a month, month and a half, we don't know, or we just might break up on the upside. So it's quite possible, the scenario for consolidation. But these are the times when you can actually look at buying for the long term, and especially there are some good deals and bargains that are available. This is the chart for Bank Nifty. It is much more cleaner, and much less consolidation happened over here. So you can see it has been consistently making all-time highs. At 23rd April it made an all-time high, then 9th of June, then 30th of June, then 2nd of July, and then it has gone into a sideways movement, and the high, which is 57,600, is not very far away from 56,800, so about 2% away from the high that we made about 13 days back. So Bank Nifty, as you can see in the chart, is a much more stronger index, and it's been shown consistently over the last 2-3 months. Now I wanted to take your attention to some of the interesting ones. This is the Nifty Midcap chart. As you can see that the rally in Midcap is just going one way. So Midcap actually made a high on 10th of June, and then again made a high on 1st of July. And you can see over here the movement, the last 2 days Midcap has really roared back, and we are almost closer to the highs. So this is the difference, that you can see that small and mid caps are running the party. This is the small cap chart. So just have a look. This is even better, and you can see just one way movement from 23rd of June, and small cap is consolidated in a very narrow range. It's not even corrected, and it's going up. Whereas if you look at this particular area, this is the time when small caps were correcting. As you can see over here, this is the chart from December. They started correcting, and this I had drawn a trend line which was perfectly followed. So lower lows, lower highs. So you can see the patterns that were getting made, and all the way the lows were finally made on 7th of April. So you can see after that there has been the rally, higher highs, higher lows, and it is continuing. So it is yet to take out its all-time high, but it's very close. So we don't know whether small caps are going to make an all-time high or not soon, but the momentum is definitely with the small caps and mid caps as we speak. So the only one problem that I foresee in small and mid caps is that their valuations are much higher, but that has always been the case. So that is something that we have to watch out for. Maybe the earnings over there are much higher than Nifty, and hence the premium. Now let us look at how the open interest is playing out. Now open interest has improved a bit from 0.55 yesterday to about 0.69. So today there was some put writing, so about 2.63 crore puts have been written, and there's not been any call unwinding. So it's just basically puts that are being written. Let's see if in the closer strikes, again calls have been written. So it's basically a story of puts being written at 25,200, 25,150 and 25,100, but the overall OI is still not turned bullish. It is still a 6 crore odd gap between calls and puts. So let's see if the market goes lower or this gap is covered. Either of the two things is going to happen before Thursday. Now let us look at the straddle. Now straddle premiums have collapsed. They are at 147 right now. I'm talking about the Nifty with 2 DTE. So let's see how things go. But I think we will have to be cognizant of the fact that this is the new regime, and a lot of things have actually changed post this Jane Street saga. Options have been decaying very uniformly. A lot of volatility is gone out of the market. So I would suggest that it was an excellent decision by SEBI to ban Jane Street, because the market has started to function normally again. Options have started to behave the way they are supposed to, with the intrinsic value, with the time decay, which is just not happening. There was too many spikes earlier. So I think especially with the Jane Street ban happening, things have smoothened out a lot, I would say. So now coming to the Sensex straddle. So Sensex again was a simple case of easy melting of premiums today. So 915 we opened at 255, which is very less, but then after that we just kind of it was actually around 300 we opened, not 255. This is a 15-minute chart, so you can see within 15 minutes the straddle had gone from 300 to 255, and there was a simple melt. So there was hardly anything in the expiry today, except for some little upside movement that happened. Now coming to where the indices are from their 52 weeks high, Bank Nifty, Nifty Bank, Nifty are all there. Midcap is there. Nifty 50 is only 4% away, and small cap is again 4% away. So all the indices are doing good. Nifty next is minus 12%, which needs some catch up, and FMCG is at minus 15. IT is minus 18.8. So some indices are lagging behind, like FMCG, IT, Realty, Autos, Public Sector Enterprise, Momentum. So they will also have their time, when they will also start rallying. But the real action is happening in small cap, mid cap, which are almost all the all-time highs. Now this is the performance of various sectors over the last YTD. So you can look at this column which says that financial services are up 14.5% YTD, banks 12%. So clearly this rally is being led by financials, banking, infrastructure and metals. They are performing better than Nifty, which is up 6.5. But if you look at 1 year performance, Nifty has been flat. So you can see over here 2.33% over 1 year is very ordinary performance by Nifty. Now let us look at the laggards of this. FMCG minus 0.7, Pharma 3.3, minus media minus 4, IT minus 13, and VIX has gone down. So a lot of these indices, like for example IT, if you see, it's at minus 13%, but why 1 year returns are just minus 4%. So it's not that it's performed very badly over long periods of time. So for example, if you see 3 years, it has given 41% return, but yes, returns have been very, very subdued. Whereas if you look at high performing sectors like infra, which has given 100% returns, or public sector enterprise, which has given 164% returns, autos, or Midcap 107%, small cap 113% over the last 3 years. So this is where you have to also identify which sectors are doing well and see whether you are exposed to those sectors or not. Like for example, banking and financial services did not do anything for a long period of time, but now it has come back. Now let us look at the international cues, how they are stacked up. So US 30 years is at 4.95, which is okay, closer to 4.5, which is, if it crosses 5, then it's a trouble. Bitcoin crossed 121, it's $122,000. My God, it's now at 117, but this has been the story of the week. This and Nasdaq also made yet another all-time high, and the futures are again in green. So US markets are firing, and it has got something to do with the dollar weakening. And if you look at Brent oil, it is closer to 70, and USD INR is at 85, which is okay, and gold and silver continue to make their all-time highs. So that is in terms of the international cues. So basically all okay. US future is also up. US dollar index is behaving, so nothing to worry. There was a slight worry about the Trump announcement on Russia, but that is also kind of fizzled out, so it's okay. This is one story that caught my attention, which is that RBI inflation to be lower than estimate. Governor Sanjay Malhotra tells CNBC TV 18. We are in a neutral stance as decided by the MPC and can move in either direction depending on the outlook rather than just the current data. RBI Governor Sanjay Malhotra further added that if inflation and its forecast come down, or if growth slows down, rate cuts are possible. This is on money control. So this is a very, very interesting thing. If the inflation numbers came out a couple of days back and they were much lower at 2.3, if I'm not wrong, and basically what it signals is that if inflation continues to go down, then there is a possibility that RBI might cut rates further. If that happens, then the cost of money actually becomes very, very less, and even if earnings are decent, then Nifty will have very, very high multiples. So that is one huge tailwind that is there in our markets going ahead. Another good thing that is happening is that the international markets are stable. US markets are making an all-time high. So there is a huge gush of liquidity that is happening. US dollar index is down. So FIs have stopped selling and the retail money is coming in. So everything is kind of indicating that we are doing really well and our markets can scale all-time highs. It is just that where you are invested is very, very critical, and hence I say that you should always be invested in mutual funds via the mutual fund route. Don't try to make your own portfolios, because for retailers they will always tend to pick up the hottest sectors, and then the returns are subdued. So you should always try and build your portfolios via mutual funds, and if anyone is interested in their portfolio building of mutual funds, they can contact me through the Google form given in the sheet description below. So it is important to participate in this rally and buy on dips, which I have been doing. I've been advising my clients to do, and it's worked out so far. So if market falls, I would see it more as an opportunity to get into quality names and quality mutual funds, and even sector specific mutual funds are okay if you know which sectors you want to get into. So that's it from me now. It looks all good. The options market is absolutely benign, I would say, and it is giving an opportunity to make money for option sellers after a long time. First 3 months were very, very rough, but I think it is being more than compensated this month, especially after the Jane Street ban. So markets are option markets are absolutely perfect this time for selling if you have good systems in place. So that was the update for today, and if you like my content, please do subscribe to the channel, and I shall see you soon with another update on Thursday. Till then, have a profitable trading week. Take care of yourselves and have a nice day. Bye bye.